Let's get to our final trade of the day. Scott Bauer, Trading Advantage, joins me now. He has his eyes on Netflix, as a lot of traders do.
Unbelievable. You know, this is going to be the first big announcement of the FANG stocks. Lots of expectations here. The big metric that people are watching here, not necessarily revenue, but it's subscriber growth.
Always, right?
Always, always. And this thing has been on such an amazing run, which, you know, from the charts technically here, really there's nothing to think that it wouldn't continue. Now, that being said, Angie, what I'm looking to do is actually play the backstop in this stock. When I say backstop, I mean the big support area, which comes in right around 197 to 200. Major support. So what I'm actually looking to do, and I haven't done this yet, I'm looking to do it today before earnings come out, is sell a downside put spread. What that allows me to do is collect a credit. If the stock does happen to drop below, probably the target I'm looking at is 197.5, I'm okay with that because I would be a buyer of the stock at that price level anyway. If the stock doesn't go down there, it rallies or it holds still, great, then I collect the credit. So I look at this as a situation where I want into this stock down at 197-ish. If I sell this put spread and the stock gets down there, then that just gives me a lower basis of entry.
Right, so you want to be long the stock potentially, but if it's put to you
exactly
via your put spread, you're comfortable with owning Netflix.
Absolutely.
At a lower level.
Absolutely.
You hope.
You know what?
A lot of people hope. A lot of people would like to see this stock go back to 8. Let's be honest.
Yeah, that's probably not happening, but you're right. Exactly.
So let's take a look at another stock that I want to talk about, and that is General Electric. We've been mentioning this on the show because it's so widely held, and we saw it slide below $17. What is your take on General Electric?
Wow, is all I can say. You know, just when you think all of the bad news is out there, more stories come out. They keep unearthing more and more expenses, more and more metrics that we didn't know about. And that's what we saw on Friday when, like you said, the stock dipped below 17. Not only did it dip below 17, it did it on humongous volume, humongous put activity, implied option volatility going into, going into earnings, which are tomorrow, exploded.
Right, so the options market is very nervous about General Electric. That's what it tells me.
Yes, in fact, the option market is pricing in $1 move. Now, $1 doesn't seem like a lot, but on a $16 stock, in a stock like GE, that is an extremely expensive move.
Where do you think the floor is, or where the support is in this stock?
Well, I would have said 26, 23, 19. You know, at this point, I don't know, because I look at it more of a fundamental than a technical situation here. And you just don't know what the next shoe to drop is going to be or what they're going to say. So I personally am not playing in this whatsoever. Now, do I think with the expensive volatility that there's, you know, an opportunity to sell some premiums, sell some volatility, maybe even sell both sides of the market, a call and a put to play for, you know, that expensive premium? Yes, I think that opportunity is there. But honestly, I have no bearing whatsoever if this stock's headed to 12 or 20 next.
We had a lot to talk about today. Thanks so much for coming on the show.
Absolutely, my pleasure.